Hello. Testing. Testing. Oh yeah, I need to tweet out, don't I? Sorry guys, I'm a bit useless today. Pajama Man, is that my new name? Yeah, we're just having a few technical difficulties. David's having an issue with his mic. Mate, no, it still sounds glitchy. Sorry guys, it's going to be a dodgy stream just as we set this up, alright? I'm just going to mute my mic for a minute. Alright guys, we're having issues. David's mic sounds like glitchy. So give me a few minutes. Right, we're back guys. We're going to try this. If it fucking doesn't work, we'll reschedule and I'll just do a solo stream for half an hour just to give you some market insight on this terrible market action. So, it's breaking up again. Right, it's working. It's working. We'll try. How you doing, David? Yeah, not bad. Not bad. A bit fucking startled now. Right. So where should we begin? Where should we begin? Yeah. Oh, they're saying they can't fucking hear you, mate. Hang on. Yeah. I know. Hang on. That's my bad. Hang on. No, this is my bad. One sec. I've got my fucking speaker on. I'm an idiot. Right, unplug that. This is going well. Headphones. There we go. There we go. Right, try again.
Right, is it working now?
Yes. Sorry, guys.
Sake.
Fucking hell. It's usually me ripping SC at being bad at tech, but I'm a fucking nightmare.
Yeah, so that's all right now. Then. At least you can hear my angelic voice.
Oh, you sound good, mate. Mate, if this was my issue all along because I had my speaker in, I'm going to fucking squeal.
I think it was.
I think it was. It sounds great now. I think it was interference from my speaker. Oh.
Fuck's sake.
Right, let's crack on, mate. Let me do a screen share for you so you've got...
Oh, yeah, of course.
Quick...
Is this on... Is it via Go2 or here?
We'll just do it on here, mate. There you go. Just so you don't get that delay from the stream.
Oh, right, okay. So, which one am I doing it on? Am I doing it on... Do I have to do it on any? Does it matter?
If you let me know when you start.
Oh, right, okay. I see what you mean.
I'll move it over so I'm not doxing.
Yeah, I mean, you know, there's not that much that I really need to show, I think. I think at the moment it's purely kind of more down to narrative, I guess. And I think in terms of the macro stuff, everyone knows where inflation is. Everyone knows, you know, where interest rates are and where they're likely headed. Everyone's looking at risk assets at the moment, S&P 500, Bitcoin, etc., etc. But I think key now is really that we're seeing a lot of data start to deteriorate. And we're in a very, very interesting time because it doesn't look like central banks are really wanting to let their foot off the gas in terms of rate cuts. We did see a slight pricing in of the potential for a cut last week, or maybe it was the week before actually, of March to June. If you look at the March to June 2023 spread on euro dollars, it doesn't really matter. Like, you don't actually have to fucking look at it, but you know, if you just if you just take my word for it, that it was pricing in a very minor cut, and then the entire curve started to price in a cut of actually 50 basis points for next year. So we are starting to see, you know, the market perhaps think that a cut for next year could be on the cards, but that's largely irrelevant for this year and what that means for the short term in for risk assets and, you know, I guess assets in general, because it's a long way still till 2023. 6 months away? Yeah. So it's, you know, the Fed, I don't think, or any central banks are really going to be looking to take their foot off the gas anytime soon, because inflation's high, and they can't just enter into a recession, which is going to happen because business cycles, you know, occur. Yeah. They can't enter into a recession with inflation this high. You know, that would just be an absolute nightmare, because what it means is that they simply cannot use the same tools that they would have done previously. And I would actually be on the side of thinking now that it's unlikely that they're going to use QE to the full extent for quite a while. They really, really won't, purely because of that inflationary risk. You know, it's really, really troublesome, the situation they're in at the moment. And I would not like to be a central banker. Everyone fucking shits on central bankers, Jerome Powell, you know, Bank of England guys, Bailey, Lagarde. I wouldn't like to be a central banker right now. I think it's the shittest job in the world.
Yeah, I do. And, like, there's never really been more eyes on this sort of stuff that I've ever seen in my life. Like, it seems like everyone's an expert recently, which is kind of baffling. Like, everyone seems to know more about what's going on than they do, which is funny.
Oh yeah, absolutely. You know, I've kind of refrained from saying, "Oh yeah, they're doing this wrong, that wrong, whatever." Apart from Christine Lagarde and the ECB, because they're just a bunch of absolute idiots. They have no clue what they're doing. You know, they've introduced this anti-fragmentation policy, which is basically meant to prevent peripheral sovereign yields from, you know, getting away from the German 10-year yield. And what they're planning to do with this is to sell German bonds and buy Italian bonds, so that, you know, they're buying Italian bonds, which means that the yield on Italian bonds decreases, and then the yield on German bonds, because they're selling them, increases. So then that spread basically thins and narrows. I mean, that's just absolutely complete and utter, 100% the shittest policy I could ever imagine.
Yeah.
Because you've got Germany there in the Eurozone, and I'm talking about this because it's massive kind of geopolitical risk as well as, you know, monetary risk in terms of what the ECB is doing. But you've got Germany, who basically funds the whole of the Eurozone, now taking a loss on the government bonds that they hold at the Bundesbank, because they need to save Italy, they need to save Spain, they need to save Greece, etc., etc. You know, it doesn't make any sense. And at the end of the day, what comes first, the whole project, or, you know, Germany? So what are the German taxpayers really going to care about? Are they going to give a fuck about Spain, Italy, Greece, etc., or are they going to care about themselves?
Exactly.
Do you see what I mean?
Yeah.
And this is now, you know, these are the types of things that I'm starting to price in for next year, because these kind of risks take a little bit longer to play out, these geopolitical risks, especially when they're to do with things like massive supranational projects like the EU, for example, or the Eurozone more specifically, which then leads to, okay, are they going to be able to keep hiking? Are they going to be able to cut? Do you see what I mean? So this is the way that I start to build up a macro picture in my head. You know, right now there's this outside chance of things happening. What probability is there that it becomes, you know, more real, or that it actually happens? And then what's the impact then on interest rates, on the policy that central banks follow? Because at the end of the day, that's all that matters for asset prices.
So something I've been contemplating over the last quite a while, to be honest. I'd love to hear your input on it, because you're way more knowledgeable than I am. I like a scenario I can see playing out is that we get some sort of deflationary environment happen soon, but I've never really seen that happen with inflation as high as it has, and I'm wondering how possible that is, that like the demand is going to get so crushed that you're going to see sort of secular deflation in certain areas of the economy, but then sort of you're going to see inflation in other areas, like, you know, what do you call it? Oh, my brain's not working. You know, your basic household goods and everything are going to stay skyrocketing, but then, you know, your non-essentials, you could see deflation really start to hit as, you know, demand decreases massively.
Yeah, no, I mean, I think there's definitely that potential, but to get that kind of Minsky moment where we flip regimes, obviously it's not really a Minsky moment, but sorry, there has to be a Minsky moment for us to flip those regimes. Yeah. You know, we consider COVID, you know, that was a massive sort of Minsky moment, but the other way, I guess, for inflation, and for markets and basically the whole economic regime. One of the things that I still remain very, very steadfast on is that China is in big trouble.
This is my worry. Like, you know, the export and everything, and with this demand decrease that's inevitably, well, it's happening and going to get worse for, you know, non-essential goods. Like, it's kind of crazy, to be honest.
Yeah, because basically the way that I see it is that, and it's not really been spoken that much, funnily enough, over the last couple of months, but credit is, you know, credit's getting smashed at the moment. If you look at the high yield index, or pretty much any IG index, investment grade index, you know, triple B index, whatever, it doesn't matter. The spreads are, you know, increasing consistently. which is not good for, distressed debt. It's not good for firms. It just basically costs more to get funding, essentially. So we're seeing that debt and credit is getting repriced, and China and Asia is one of the largest debt markets, obviously, in the world, and a lot of the bonds are denominated in the dollar. And what are we seeing right now? We're seeing the dollar absolutely go mental. So all of their debt is basically getting repriced a lot higher.
Yeah.
And the amount of leverage that's in the system, I think this is why the PBOC and the CCP were really looking at trying to, subdue leverage, subdue like excessive speculation, etc. over the last couple of years, because they were kind of seeing that it was way too high. I think Chinese debt to GDP is like 340% or something like that,
Jesus.
which is it's insane, We had another property firm the other day default on $1 billion bond payment.
Yeah.
So these issues that we were seeing, early 2021, they're still going on.
Yeah.
The Evergrande story is not finished yet.
Exactly. Yeah, I was just about to say that.
Yeah. These
People
things
kept saying it's priced in, but it's not priced in at all, really.
No, and this is what I was saying the whole time, is like, you don't expect a Lehman moment with this when liquidity is still so plentiful. And, relative to history, markets are still very, very liquid, and there is still loads of liquidity out there. All you have to do is look at the Fed's balance sheet to see that things are still very, very liquid, which is actually quite scary, because what if things deteriorate even more? What if they actually start actively selling their mortgage-backed securities, selling their treasuries? Do you see what I mean?
Yeah.
And that
what do you think the
liquidity
probability of them having to do that in the midterm?
Well, I think they're going to want to get the balance sheet down a bit.
Yeah.
They're going to want to get it lower, because it comes to the situation where things become political as well. If they're seeing that the balance sheet's at $9 trillion or whatever it is, it hasn't gone down, and it just increases when the next crisis comes. Right? People are going to say, okay, what's your credibility here? It kind of fragments some confidence. So there is definitely a political play on sort of relative numbers, I think, when it comes to interest rates, when it comes to the balance sheet of the Fed, when it comes to all of these different programs. But yeah, I think that China, really, really big risk, especially with this rally in dollar. One thing that could fix it is if dollar liquidity does become so sparse, which it kind of is. If you look at 3-month dollar LIBOR, it's up at 2.5%. That's the rate at which banks lend dollars to each other on an overnight basis, or whatever the tenor is, 3-month, year, blah, blah, blah.
Okay.
And basically it's really expensive right now for banks to do that.
Yeah.
So, if banks can't lend dollars to each other, then the credit system becomes a bit defunct, and we get a situation like we had in March, April 2020, where everyone literally just fucking went and tried to find dollars as much as possible, and then you get a drying up of the system.
It feels like we're on the precipice of that kind of situation, like something unfolding where that's concerned. Where it just feels like a pressure cooker to me.
You get a rally in dollar most of the time. Okay, people probably won't like me saying that, but I like to be long the dollar most of the time, purely because about 75% of the situations benefit being long the dollar. Like 75% of the scenarios. The only time you really don't want to be long the dollar, in my view, is just after a crisis, or when crisis mode is activated, which is quite rare, in fact.
Yeah.
And also when there's sort of coordinated global growth, when the US isn't doing as well as other countries, but is still doing okay.
Yeah.
Which is quite rare as well, right? So once you factor those parts out, then that's it. But I think focusing on the dollar, one thing that I have noted is they've introduced a facility called FEMA, which was introduced in July last year. Now, this is essentially to replace FX swap lines. And what this means, I'll explain the difference between the two first, and then why it's important. But FX swap lines have to have agreements already with central banks. The People's Bank of China is excluded from this. Many others are. Purely on for China, it's probably a political thing and current capital controls, etc. They don't want to be seen to be reliant on the US almost. So yeah, you have to have existing agreements to access that, and the reason they do it is because dollars are illiquid. They go to the Fed, say, all right, we'll swap you our currency for dollars because we desperately need dollars. Blah blah blah. blah. So this new facility, FEMA, is basically a repo between foreign central banks. So a central bank can, rather than swapping their currency, they can swap the treasuries, the US treasuries that they hold in reserve for $4, right? Which enables basically any central bank to participate. So what I'm looking for a reversal in the dollar is for an uptick, and you can see it on, I think it's at the New York Fed on their website. If you type in FIMA facility use or something like that, New York Fed, then you might be able to see it. I think it's updated weekly. But when I'm looking for a considerable uptick in the use of this facility to basically indicate to me that, people now are tapping this line and the supply of dollars on the market is going to increase, which would lead me to say, okay, I want to short, for example, dollar yen, because that's overextended. Dollar liquidity in Japan is quite thin already, so you would expect a reversal based off of something like that. Okay. So, when we talk about macro, you have to talk about macro on the big picture, but then look at sort of these small idiosyncrasies in the market that could lead you to quite a big reward, I guess, in the trade. So, something that most people wouldn't look at to indicate something which could be, in fact, quite a broad turning point.
Yeah.
It's a bit of a rabbit hole there.
Yeah. It feels like the whole world's a rabbit hole at the minute, to be honest.
Oh, I know. I know. It's a nightmare. I mean, with this Russia-Ukraine conflict as well, that could be something that keeps inflation sticky. Yeah. It definitely could be, because if you just keep tensions in one place, that's going to keep certain commodity prices elevated. That has a knock-on effect to importers of those commodities. And I think that something that's kind of gone under the radar a little bit is what's happening in Latin America and South America with all of these. The Ecuador, I don't think, something like Ecuador have been on strike for 19 days now.
Jeez. Something
like that. Chile, there's mining protests, all of this stuff. North Africa, I would expect, as it normally does when food prices get high, something to kick off there. Think about 10 years ago we had the Arab Spring. So there's a lot of little pockets of shit going on that you tend to normally get just before a recession pops off, I find. Or some kind of crisis.
It's been, it's been, I don't know, it just seems quite obvious to me, like it has done for a while. Like, it's so cyclical how it comes around every sort of 5-6 years, in my opinion.
Yeah, that's it. No, absolutely.
But it feels it's about as bad as I've ever experienced it in my sort of short time. I kind of caught the back end of 2008, and it pales in. It seems to pale into insignificance really compared to back then.
Well,
but I'm seeing the same patterns of behaviour. It's like it might be a nice segue into talking about the property market, because basically I was in construction between 2006 2008, and I was really like in the thick of the shitstorm that happened, and I can see the same patterns of behaviour happening now in the property market that I saw back then.
Yeah, well, the biggest indicator to me that the property market is fucked is if you look at XHB, which is the home builders ETF. Now, Case-Shiller home price. Now, this is US specific, but the US basically affects everything. So you could you could transpose the home builders ETF to the UK, to fucking Germany. It would still look exactly the same. And the last recording we have of the Case-Shiller home prices index. Let me just get it up on mine. Sorry, I'm upstairs and I don't have my adapter. My fucking screens. I'm just on a laptop and it's just annoying. So I would show, but I mean, it's just
If you
Right.
want to link it on Discord, I can pull it up.
Oh yeah, yeah. Oh yeah, I can share charts. I forgot I'm a trading view, so I should really know my own products. I don't know if that's going to come up now.
Let's see.
What's it showed?
Is this the one? Yeah.
Is it the? Are you seeing the home builders ETF there?
US dollar Norwegian krone, I'm seeing actually.
Yeah, no, that's the wrong one.
I've got XHB
Right.
up on mine. It's at 57.95.
Yeah, so if you have XHB up and then you have the Case Shiller year-on-year home prices, I'll explain a little bit about why I've used this as a leading indicator in the past. Well, actually this year.
Are you asking me to do something? Do I need to do something?
Yeah, sorry. Yeah, so you've got XHB up there.
Yeah.
And then if you do compare and then add in Case Shiller year-on-year home...
How am I spelling that?
So CASE, base, and then Schiller, as in...
CBS.
Yeah,
Schiller.
Schiller. CASE, case,
yeah.
And then Schiller.
SHI.
Yeah.
Mate, I'm quite dyslexic. You'll have to bear with me. Like that?
I can't see. Hang on one sec.
If you look on Discord, I've got a stream up.
Oh, no. Oh, it just said, no, it says...
Oh, I've got it. Sorry.
By the way,
guys.
It says streams failed to start on...
Discord. I'm sharing screen on Discord.
Hello?
Hello?
Where have you gone? Oh, God.
I can still hear you.
Where's the sound go? Oh, fucking hell. What's just happened?
Oh, this is good. We can all hear David, but you can't hear me. Let's...
Oh, mate, I can't hear you now. What? Have I just clicked off it on my phone? Oh, that's what I've done. Fucking idiot. Right, one sec.
Got one of the biggest brains around in the stream, and we can't work Discord between us.
Sorry.
Hey,
Sorry.
that's
Right.
alright.
Jesus Christ.
This is comedy gold.
Pinky and Perky, two boomers. Just trying to fucking play with shit.
I remember sending letters back in my day.
Yeah. I got a letter today, actually. I was surprised. But yeah, so basically, with the... I think you've got the month-on-month up there.
Week. What time do you want it on?
No, just the Case Shiller home price.
Hang on, I know what I've done. I need to do it.
You've done it, yeah.
Price
okay,
thing.
yeah.
New price scale. There we go. Is that better?
That's it. Yeah, much better. So you can see there that, so if you think about this logically, would house builders build in a market that's going down? No, probably not.
Yeah.
In terms of price, that is, in a market with house prices decreasing, they wouldn't, because they want to make money on the way up. They want to build bigger on the way up, get more funding. You know, that's the way that it works. So what does that Jesus Christ, I'm even burping now. It's ridiculous. What does that imply for the lagging indicator, which is house prices? Okay, we can see there that Case Shiller is, still up there, even though house builders are getting decimated. And I think they're the worst performing sector year to date as well. So that basically implies that the housing market is really, really taking a bit of a tumble. But it's not exactly unsurprising, is it? If you think of just even Einstein's theory of relativity, what was it? Every action has an equal and opposite reaction, right? The fact that house prices have gone the way they have over the last 2 years in a pandemic, when there was literally zero economic activity at one point, negative economic activity, yet house prices are still going up. Mm-hmm. You just need simple logic to think that it's like an elastic band and the band is breaking.
Yeah.
it's not like it's happening for no reason as well. Interest rates are going higher. Although people have locked in, long mortgages, from 2019 till now in the UK, I think 96% of mortgages were fixed rate.
Mm-hmm.
But still, it doesn't necessarily matter. People still have to pay it each month, and if
Exactly, and then
things
they've got to pay their electricity bill still, and their water rates, and all that comes with it.
exactly, and so with inflation up here, with real wages not necessarily going up hugely, it's gone up a tiny bit. I think might even just be negative. People aren't going to be looking to buy houses.
Yeah.
But it's going to be a perfect time for maybe next year, the year after, if interest rates do sustain higher for a little bit to buy then probably, because it's just so overextended.
Well, the patterns I see that are relatable to 2008 is you get a big influx of sort of government incentive to build. Construction absolutely booms. Wages go skyrocketing for construction workers. And then it reaches a point where they've built so many houses that there's just surplus supply that's not getting sold because it's overly priced as well, because the prices have increased. They can't shift the properties that they've built, so the prices start. I mean, I'm seeing it in my local area already. You've got new builds that have only just finished being built, already being reduced on Rightmove.
Yeah.
And then basically what happens is they stop production, they stop building. They can't sustain people on the wages they've been paying them. There's mass layoffs, and it just seems like it's inevitable that it's going to happen again, exactly the same.
Yeah, no, absolutely. And something that's quite funny. Well, not funny. It's fucking horrible, actually. But it seems like the quality of these new builds is absolutely shit as well.
Dog shit.
So it's like there's been shrinkflation in quality since 2008. So you're getting the same issues, but with shitter houses that have been built.
Yeah, and like on a practical level, what they do, they design them in CAD now, based on, and basically all the measurements in a new house are designed to not have any wastage of materials. So all the lengths are like set dimensions based on like pipe length, straight from merchants and stuff.
Right.
And yeah, they're basically cheap boxes.
Yeah, Barrett Home Special, and there's nothing wrong with buying a house like that at all, because the price of them is what people can afford these days. There's absolutely nothing wrong with it, but the housing market globally is completely broken, and people might hear me rant about this on Twitter, but I'm a big proponent of Georgism. It's kind of one of those things that will never, I don't think in any time soon anyway, be able to be actually introduced in reality, purely because the landed class is politicians, the landed class is those in high places, I guess, and so it means that people aren't going to want to give up the sort of unearned income that they generate really, really easily just from holding on to land. Whether you're a landlord, whether you own a house, the real cost of a house is what the bricks sit on. Let's take this for example, right? If you were to take a house in Mayfair, okay, take every single brick down and rebuild the house in somewhere like, I don't know, fucking Stoke. No offense to anyone from Stoke. How much would that cost? Like relatively, probably like 10 times less, right?
Yeah.
So this is exactly the issue, is that what you're getting private owners of land are extracting value that the public give to the world and putting it into their own pockets, and that's what leads to house prices going higher. Let's take as well, so I'm going to keep throwing examples till kind of people get it, because people get this in different ways. So the Elizabeth line in London's just been built, brand new train line. All the houses along that line have gone up by about 10 to 20% more than houses elsewhere. Now, what did the people live in those houses that, they buy the house, whatever? What have the people done to earn that increase in value, that abnormal increase in value? apart from just literally living by there and being lucky, right? Everyone in the country has paid taxes in some big or small way towards this line being built. But then at the end of the day, it's someone private who's done nothing to earn that who gets the uplift from their asset.
Yeah.
Do you see what I mean? So, my solution is to tax land values, reduce taxes on income and capital, because income and capital are massively productive. You get to keep what you make. I get to keep what I make from my business.
Mm-hmm.
Do you see what I mean? Obviously tax it a little bit, but the way that we do it at the moment, by not even caring that the housing market's completely broken, thinking that we can just keep building houses and that more landlords aren't just going to suck up those properties as well, and then rents still increase. It's mad to me.
Mm-hmm. I think there's going to be an issue with the rental market too in this country. I'm not sure if the incentive is there or has been there for a while to actually have a rental portfolio that's like sort of financially viable, really. I wonder how it's going to play out, that if we get a real influx of supply.
Well, all of these, the last 10 years has all been to do with buy-to-let mortgages, hasn't it? You buy one house, you can get fucking probably 2 mortgages on that one house or something as collateral. You get one up, you get another house up in, for, I don't know, 100. If you've got a house in London, you get another 100 grand up in, Newcastle or up north or something, and then you're able to get another one probably elsewhere. Do you see what I mean? It's just massive leverage.
Exactly.
And then what happens to the landlords when people can't really afford their rent?
Yeah, exactly.
I don't know.
It's fucked.
So, yeah, no, it's a really, really shit situation we're in right now. And I feel sorry for a lot of people that just, I'd say that, you, myself, others who are in the financial game, we're quite lucky because we're probably, higher earners.
Yeah.
I feel quite sorry for those who are on middle incomes, because this must be a horrible, horrible time for them.
Yeah. Well, I see it. I've got friends in hospitality, etc. And they haven't had a pay rise in God knows how long.
Yeah.
Bills are astronomical. They just can barely afford it. Like, we're already stretched to begin with, and they're either they've got rent increases for the last 2 years to meet inflation. It's just like savage. How can you charge someone more to meet inflation and not give them an increase in their income as well? It's fucked.
Yeah, no, exactly, mate. It's just ridiculous, and that's another thing. With regards to landlords, is that again, they don't really do anything to earn their cash. Basically, it's not like they're just letting out their house. They're letting someone else live in a house that they have bought, which is fine. I get it. People get very fussy and protective over the fact that, I put my capital at risk to buy this house. But landlords are the only people who think that they deserve to make a return on their money every single year.
Yeah, the way they got treated during the COVID and fucking helped out was disgusting, really. Over the actual tenant. They should have, it's their risk at the end of the day.
Exactly.
And that risk got passed on to the tenant, which I thought was diabolical, to be honest. But
yeah, so this is probably my the whole land value tax and Georgism thing is probably my most extreme opinion, but it's not actually that extreme. It makes sense when you look at it objectively, and you kind of study and read a little bit more about it, because it sounds like another property tax. It's not. Property taxes are property taxes. You pay a tax even if you improve your property. If you improve the value of your property, then a land value tax is based on the unimproved value of land, which basically prevents people just from going and hoarding land. It disincentivizes it.
Yeah. The only thing I would say to go as a devil's advocate, because I think I understand what you're saying, but doesn't that disincentivize landlords further and then actually hurt the renters in due course?
No, because
who's picking up that slack? If margins for letting properties are so small already. Like, who picks up that slack?
Well, at the same time, property values would decrease because it reduces the overall incentive to think of property as an investment.
Okay. Yeah.
And then it diverts capital to more productive things like starting a business, like rather than just letting money stagnate in land at the end of the day. So yeah, there's a lot of productivity gains to be made if we were to unlock some of the money held up in land.
Yeah.
Not just give it to government, though.
London itself has a lot to answer for. Like, a lot of these price increases are kind of, what's the word? Is nefarious the right word? Like, it's a lot of offshore money coming in and basically laundering money by overvaluing the land.
Probably.
And then siphoning the money into offshore accounts, and then it's obviously having a ripple effect to where it's increasing the value of everything outside it.
There's a lot of murky bullshit like that in London. Absolutely, if you walk along the Thames, most of the apartments seem to be empty. Yeah. Each one's probably $1.5 million, if not more, plus. I wonder why that is. It's one of those things where property can be used as a bank account, absolutely, because there's no regulations over it. You could do a private deal if you wanted to. Just send money to someone's bank account and they give you the deed to the property. It's not like there's anything massive that needs to go on. It's not like buying shares or something. I guess you could do the same with could do the same with shares, but it's kind of easier to track then, I guess.
Yeah. So, after all we've talked about, how would you play the market over the next 6 to 12 months? Let's say, I suppose, let's focus on sort of risk assets and how would you think to position over the next 6 to 12 months?
I do think that we go lower, but I think the next 6 to 12 months for me specifically is going to be more about FX. It's going to be more about cross-currency, cross-asset volatility, spikes all over the place. Going to see weird little things happening with the countries that I mentioned previously, like in South America, etc. You're going to see more acute and isolated moves happen that you can pick up on if you start to get a feel for how FX is moving. At the moment, I'm long dollar rand, for example, because if you see in South Africa, obviously if we're going to experience demand destruction, commodity demand decreases. South Africa's a massive commodity exporter, but then they've got their domestic political issues alongside the fact that they've got massive electricity shortages, which should dampen their GDP, which should mean that the rand, gets weaker. All the while the dollar's on its face ripping fucking rally. So there's a couple of different things that you can play off of each other there. And emerging market currencies, when they get going, really get going. So the only thing you have to watch for is the carry on them. So basically the funding. You can get negative funding there because of the interest rate differentials. But those are the kind of moves that I'm watching for. I think with equities and Bitcoin, I did make a joke, but I'm not even sure I'm joking about it in terms of where Bitcoin bottoms. And I said 6,942 and then 00, because it's such a fucking meme. How did it top at 69k?
I know.
Do you know what I mean?
Yeah.
Like, sometimes the dumbest things, especially in this market. I bought tendies. There was during that summer in was it 2019? I think 2020, when Uniswap started really kicking off. I just thought, this is so dumb and ridiculous. I'm going to buy the dumbest thing possible, and I bought tendies, which was chicken tenders, right? It's the dumbest fucking DeFi coin ever, and it made money. And then I got the Uniswap airdrop. I was like, yeah, cool.
Well, this is you look back on those decisions and you just think, fuck me, we were doomed from the start, weren't we? Really?
But is that really the dumbest place to have a relatively strong bid? It's low enough. If you look at the chart, it's like there's a support there, diagonal support.
Yeah.
It's such a dumb number that it's surely going to work. Do you see what I mean?
Well, my target initial target is right around 9,600, around there, because it's the only place where it's the next stop where there's any sort of historical value that's been built up. Like, there's no value where we are now. We're stalling at 20k because it's 20k. No, much like 69k is a meme, 20k is a meme. There's nothing here.
No.
We're in the void now. Now we've broke 30k to where it's just it's almost an inevitability that it's going to round trip the entire parabola.
Yeah, I mean, I like to look at that MVRV score because it gives some gives some objectivity as to. Let me just get it up here. Look into Bitcoin.com. There we go. It gives some objectivity because it allows. Is the site fucking down now? Oh, their website's down. It's got 404.
Classic. On-chainers in
Fuck's sake.
disbelief. They're fucked.
But that score gives some objectivity as to sort of how volatile the moves are. Like it had a Z score, like Bitcoin according to that score, MVRV, it has a Z score of between 10 and 12, which is fucking ridiculous when you look at it from a stats perspective. Like 99.6% of all data in a normal distribution, which clearly says that Bitcoin isn't normally distributed if it's got 10, but 99.6% of all data should fit within 3 standard deviations under a normal distribution. So for it to be 10 and 12, that is like fucking volatility on meth and crack at the same time. Do you know what I mean?
Totally, mate. And for someone that looks at microstructure and order flow all day, every day, the market cap of this shit is so astronomically inflated still, based on what I see go through the books on a daily basis. Like, it's literally being moved. It's like held up on farts. Like, there's nothing there. It's a fart. It's a dissipating fart, and we're like halfway through the dissipation.
It does feel like that, but it feels like that in ES as well, to be honest.
Yeah.
Like
well, I think
the
it's
book
probably
is
the same shit, isn't it? But I don't know.
Yeah, the book feels really thin in the ES. Like both ways. The market can get sliced one way. I think we saw it yesterday even. It was just getting sliced one way, then sliced the other, and it just does feel like some slightly larger orders can really, really send the market through certain levels quite quickly.
Yeah.
And it feels like people are stepping out a lot faster than they would have done as well. Like, they're not willing to defend a level. They're not willing to, participate as much in a certain range. They're willing to let it expand, maybe. So, I don't know. It's a tough one, but I definitely think that people calling bottoms anytime soon are, firstly in a world of pain for themselves, but secondly, are kind of irresponsible. I think it's at this stage when all we've been talking about are interest rates for 2 years, for people not to realise that rates still going higher is not good for the highest risk asset class out there.
Exactly.
You kind of deserve to have your arse handed
we
to you.
literally had the super cycle. Like, anyone that didn't buy in this period is a moron.
Yeah.
Like, it was such an easy play to buy anything like that. If you were sidelined throughout this, then for me, it was so easy for the last 2 years that any sideline capital was fully deployed. So I'm saying, like, there's no one. I can't see a scenario where there's anyone ready on the sidelines waiting to pick this up, other than people that have already sold, obviously.
Yeah.
So.
And how many of those are there?
Yeah, exactly.
There's probably many people, I think, who might have made a ton, and they've said to themselves that there's no point in me even getting back involved in the market again because I could lose it all. Maybe not though.
The guys you assume are selling the top are the guys that are selling now because they're like, all these fucking protocols, lending firms and fucking
show.
They're literally puking right now at the bottom.
Yeah. I mean,
just tells you the state of this crypto.
and the other thing as well is that, the Celsius shit. I had that nod at the start of May, didn't I? That everything was fucked, and that's what led to Mashinsky, whatever the fuck his name is.
Sounds like a fucking DJ, mate. Doesn't it?
Yeah,
Mashinsky.
I know. But that whole thing, and then people saying, "Oh yeah, Celsius is safe because their liquidation price is lowered again." Like, oh come on, are you that thick?
Yeah,
like they're completely insolvent. They're fire selling just so that they don't.
To avoid getting liquidated. They shouldn't be in that situation in the fucking first place.
No, exactly.
It's annoyed me this morning. Who's the one that filed for bankruptcy this morning? There's too many to name. I can't remember the name of it. But one Voyager. And I saw some fucking garbage thread that the guy posted about due to unforeseen market volatility. It's like, don't blame the market. You blame yourself for your own incompetence and lack of risk management. Well,
it was the same with BlockFi.
Yeah,
exactly the same with BlockFi. Like they're pulling the wool over people's eyes that there's not just been a massive fuck up, that there's massive inherent problems with the products that they provide, the business model, everything. Risk management. It spans every single part of their business. For these lending protocols. I thought so. It was ridiculous to me when I saw that BlockFi was giving higher returns for, I think it was 0 to 1 Bitcoin. Half the amount of returns for 1 to 3 Bitcoin, and then like 3+ was even a quarter of that. It was just like, you can clearly see that you're trying to stack your smallest chips. Do you know what I mean? So you can cash out your bigger players. Like, it's just ridiculous.
And then I saw one the other day. I can't remember the firm. I think it was a DeFi one, where they were taking people's deposits and then market dumping them on decentralized exchanges in order to liquidate the customers that had deposited.
Wait, what?
Yeah, I can't remember which one it was. This Otter guy did a thread on it, I think it was. And yeah, they were using... They obviously knew their clients' liquidation prices for the money they put in as collateral, like of these liquid shitcoins. And they literally were market dumping people's deposits in order to reach the liquidation prices.
I mean, there's costs and benefits to regulation. That's all I'll say.
Exactly. This is it. The ramifications of what we've seen over the last few months is, it's going to ripple out.
Yeah. No, absolutely.
I'd be surprised if
so.
An ideal situation for me would be just a fucking Bitcoin market, to be honest, and regulate the altcoins so much that there's none incentive to hold them, to be honest.
Well, yeah, I'm very much still waiting for someone to give me a very strong reason as to why altcoins are a thing, apart from a purely speculative vehicle that allows the founders to get out nicely.
I've always said they are Bitcoin's leverage.
Yeah, that's a very good one.
Yeah, I think it's Bitcoin's exit liquidity.
Yeah. And there's a lot of
shit, and then
that's, I think, when you think about it logically and think about it as to what's happened, can you define one use so far that has maintained, that is, that you could think about using in your everyday life? Not that everything has to be used in your everyday life, but is there one? I don't know. I just like it because it moves a lot.
That's the reason I like it. I love it. It's amazing. It's
exactly.
But I saw a funny tweet this morning. It's so fucking true. People taking the piss out of people that sold Bitcoin, used Bitcoin back in the day for non-significant purchases like pizza and fucking shit, and spending thousands of Bitcoin, making fun of them. But then as soon as someone comes out and says they accept Bitcoin as a payment, they then get on board with that and think that's fantastic. Adoption and everything. So which is it? You're going to laugh at people using their Bitcoin to spend, but then you're going to lap it up when you can spend it. It's like the duality of it doesn't matter what you say, it can be, it's just instantly bullish.
Well, apparently they must love deflation then, right?
Yeah, But it's not like, why would you ever spend Bitcoin? It makes no sense to me.
No, exactly. Listen, mate, I'm gonna have to run now, but
No
this has been a
worries.
great chat.
Yeah,
It's been a
pleasure.
really nice chat.
I'll
I'll
wrap up
definitely jump
anyway.
on again if you want me.
Yeah, anytime, mate. Always good to chat to you, mate.
Look at that V that happened as well, from 1 p.m.
Mate, I'm sick of this garbage. I'm gonna spend the next.
Ridiculous.
I'm gonna spend the next 15 minutes after you gone telling people where we're going. I'm not gonna lie to you.
All right, mate. I'll chat to you later.
Cheers, mate. Take care.
Cheers, buddy.
Right, guys, that was pretty great. Kind of was expecting it to be, though. To be honest, David knows his shit. So I'll do a bit longer. We'll do a bit of crypto analysis, and then I'll call it a day, I think. Zero. Yeah, we're going to zero. We did talk about housing, mate. Yeah. But the stream will go up on YouTube afterwards. So Bitcoin. Where are we at on Bitcoin? Let me open the stream chart, because I'm pretty sure we're at the same price as we were last stream. Oh, sorry, we didn't really adjust the volumes. So what am I seeing in crypto right now? It's the same as what I've been seeing for the last, I don't know how many weeks, where people are positioning for a short squeeze. People are positioning at resistance for a short squeeze. Okay? Just let me say that again. People are positioning long at resistance for a short squeeze. Okay? They're not positioning down here. They're positioning here. So if people are positioning at resistance for a short squeeze, which way do you think it might squeeze? As you can see, this ain't working now. Oh, great, sign me out. Fuck's sake. Alright, well, we've not got that, but we can go on something else. I mean, it might keep going up, but I personally think this is going to go down. How do you tell new positions from short covering? Well, I mean, I've got this data here. Like, you see the increases in open interest here, and they're basically longing into every single high. So, you see the buying here, buying here, buying here, buying here. If they succeed, we're going to get a ripper of a move. But the way I look at the way I trade markets, guys, is if I get the same setup over and over again and it keeps playing out, I'm going to keep taking the setup until it doesn't work. I don't subscribe to this time is different. I wait for the market to tell me it's different. And what I'm seeing is people aggressively long in 20k. Which way Bybit is positioned? Let's have a look. I mean, it's the same story here. You see the CVD increase. I mean, this is kind of, you see, look, higher high on CVD, and price is failing to break this level. So unless they really get a move on and blast this level, and I mean really blast it, then buyers are basically buying themselves into a hole here. And if this does break down, then I really do think we come all the way back down. And I personally think we trade all the way back down to like 18.3. I think we take out all of this, because what's funny is we got this whipsaw move here, 12%, and it's taken the market 5.5 days to trade back that sort of move. Okay. So if the market takes 5.5 days just to retrace this move without breaking out, like, it's kind of a ticking time bomb. They're against the clock. Have I taken any longs recently? Yeah, I took a long yesterday. You leverage to the teeth. I personally wouldn't be too leveraged here because it's compressing quite hard. That the move, if you're wrong, which you definitely can be, the move's probably going to be quite big. Yeah, big people are betting on ETH again, which isn't particularly good. It's just the same pattern of behaviour as last stream. But it just amazes me how quick people are to call bottom on every move up still. But let's look at daily. Let's look at daily market structure. Has this done anything yet to break market structure? Because, I mean, you can't debate it. It's not broken any market structure. I mean, if we invert it, you could make the case that the RSI, this is the only thing that I do have sort of my eye on. It does, it's potentially losing momentum. So let's talk invalidations on where I'm wrong. Okay, so this is how I'm trading it. I think this level is where we head unless we break out, and I think breakout happens above here. I think, if we get a big candle above 2630, 2700, then I think I'm wrong. But if they keep battering this level and longing without getting anywhere, then I think this is a really nice trade. If you keep tight in validation and know where you're wrong and be disciplined, don't you leverage to the tits, then I think this is the trade personally. So we'll see. Did I make a trade today? No, not yet. I do have a small short position open on Bitcoin, but I'm willing to close it if it does blast through this level. Options were also on Delta. Yeah, options are great. Options are great. Can you cover ES? Well, this is the problem. This is one of the annoyances and frustrations I have with trading Bitcoin at the minute is, like, I was targeting this level yesterday and it whipsawed with the ES. Like, I'm not blaming the ES. I don't like doing that, but it's so dependent on what the ES does. So I'm almost contemplating, do I need to be an ES trader right now in order to trade Bitcoin? Because Bitcoin can't really seem to do its own thing, which is quite frustrating. So, I mean, the ES is in a similar spot. It's consolidating at resistance. So I think if the ES breaks this level here, much like Bitcoin, then it's probably going to come back up here, and then let's have some extended targets for Bitcoin for if it does break out. I mean, it's pretty logical, isn't it, that I think it comes back up to here with extended targets up to here, I think. So is that pretty clear? Similar levels, just waiting now. Waiting. Yeah, did you hear that plane? That's in silicone. He's just coming round. Is it following Nasdaq more than ES? Well, yeah, it did yesterday, to be fair, but they were both pretty much the same thing, aren't they? As far as how they move. Inflation so high, Jim moved to Hounslow. It's funny, I know exactly what you're talking about there with the flyover. I used to have some friends that live there. But it's rare we get plane sounds. That's the first time I've had a plane over in months. So is that clear, guys? You're probably better off watching the S&P than you are Bitcoin for directional bias, which is quite hilarious. Actually, ES looks better as far as prime for a move up than Bitcoin does, I think. Where would I short from higher up if we pump? Well, based on this RSI structure, I probably wouldn't even contemplate shorting until we get up to the 50 RSI again, which I think would put us in line with, like up here again, maybe within this window. I think if it does break out here, I wouldn't fade it too early. Me personally, I won't, because it's kind of, I think it's kind of locking in the potential for a multi-day relief rally. It's quite a pivotal point we're at, really. which is why they're probably trying so hard. So. Well, this is compressing hard. We're going to get a pretty significant move out of this little compression, I think, soon. Today, probably. How did you learn to read RSI? Just by watching it every day, mate. You just see the patterns, you know. So is that clear? Is it? Feel free to ask some more market questions before I go. I didn't have a day job when I learned to trade, actually. I was already in a position to where I didn't need to work. What's going on with the fucking Air Force flying over my house? What's going on with silver? Well, metals look pretty grim, don't they? Let's face it. I'm not going to lie to you. I'm a silver collector now, let's put it that way. Yeah, we're under attack. They tried to ban my stream last week, now they're doing an air raid on my house. Just can't win. They're trying to suppress me, guys. Jesus. Yeah, silver bag holder. It's not bag holding when it's silver, it's collector. You're officially a collector. But yeah, I think this has got a one-way ticket back into this consolidation around 17, sadly. But depending on the news and what comes out this week from the Fed and stuff, it could turn on the sixpence, so you just never know. I was financially free from 2019, 2018, around there, yeah. Not from crypto, though. Yeah, I'm sitting at the airport. I'm fucking off, guys. If this breaks up, I'm going on holiday. I was in property development, Sam. Yeah, Barcelona's calling. My new passport arrived last week, so I'm desperate to get away, to be honest. Do I trade butter futures? No, only lean hogs. Lean hog futures. Yeah, buying houses that need refurbs. I'll do it again when the market comes down. I'm just waiting. Will I take the breakout long if it moves up? I'm not really a breakout trader, to be honest. Not my sort of trade. I'm a fader. I only fade extremes. So I'm happy to miss a move. I'm not a. I don't really feel comfortable taking breakout continuation trades. I'm just not my thing. I like buying off sellers at the wrong price, and I like selling to buyers at the wrong price. Darth Vader. That we need to make a meme. I don't know what's going on in the background, guys, but it's a bit ominous, isn't it? Quick look at ETH. I can look at ETH. Absolute. I mean, there's not really any point looking at ETH. It's exactly the same as Bitcoin. It's absolutely probably where you do not want to trade it, sadly. Let's look at levels. You know, it's at resistance, sadly. Like, it doesn't matter how you cut it, it's at resistance. I still think, barring what the ES does, I think down first, because I just see too much. I see too much long build up in these highs for Bitcoin and ETH. It's no different to this consolidation. It was the same thing. You know, we get a bit of weakness on the 4-hour RSI. Good luck, Jordan. Do I think Eve could pull an LTC next cycle? What did LTC do? I don't even know. Yeah, I did quite a lot of the refurbishment work myself. I'm a qualified joiner. I'm a qualified joiner, so I did most of the carpentry and stuff. Fit the kitchens, fit the doors, fit the skirtings, fit the floors, fit the windows, doors, everything like that. Can I look at coin? Yeah, we can finish on coin just so we can have a laugh. Oops, doing. I nearly put doing. The cat carpenter. They call me the repairman. The repair cat. I mean, what do you say about this shit show? I mean, honestly, if you want to trade it just solely from technicals, it's actually a really nice long setup, sadly. I hate to say it. But you got 3 drives on the daily with higher lows on the RSI. It might be setting up for a short squeeze, to be honest. Hate to say it. You know, if it breaks this last high, you know, I'd say anywhere around 90 to 100 it might squeeze to. That seems like a big squeeze, but if I was looking at this as an altcoin chart or whatever, MSTR. Let's have a laugh at Sailor as well. Similar, isn't it? Similar RSI structure. It'll probably, after I've said it's locked in 3 divs, it'll probably go wah. Straight down. Sailor saying Bitcoin is hope. This isn't much. There's not much hope to this fucking chart. So, but yeah, honestly, to be honest, I just wouldn't trade this shit right here, unless you're like a degenerate like me. Right, guys, we've been going for just over an hour. See if there's any more questions come in. While I say thanks to Delta Exchange for sponsoring, as always. You can check them out in the description for options and derivatives. If you're looking to trade options, they're really good for options, especially. Cheers for tuning in, guys. Below what level do you think Bitcoin is going down? What, as in down, next leg down? I think below. I kind of think below 19k. You notice how I said this on CBS's stream. People are obsessed with round numbers on Bitcoin, so we're literally ping-ponging between 20 and 19. So, you know, like I say, if it breaks this level, then we're going to play the larger range, and we're probably going to trade back up into here. If it does break down here and it breaks down here, then what would my next target be? Big boy, fucking move. Oh, I don't even want to show you. I think it comes down here next. If it breaks down here, then see you later. Am I actively watching any alts? No, not at all. No point until Bitcoin finds some support, really. I read that as live within Silico. I've asked him, he's never going to come on, sorry. Right, I'm off skis. I'm going to go enjoy the sunshine. Thanks for tuning in, guys, appreciate it. And I'll be back next week, same time. Take care.